Good morning, everybody, and thank you for joining us today. My name is Alex Knight. I'm Accounts Senior Manager based in our Chatham office at Creston Reeves, and I'm leading on Making Tax Digital for our firm, ensuring that we and our clients are all prepared for Making Tax Digital for income tax before April 2026. And I've also been liaising with HMRC and others in this process. Today's session is all about helping landlords just like you to prepare for one of the biggest changes to the tax system in recent years, Making Tax Digital for income tax, otherwise known as MTD. Whether you own one rental property or manage a portfolio, these changes will affect how you keep records and report income to HMRC. But don't worry, we're here to break it down clearly and simply for you. So before we start, just a little bit of housekeeping. We are recording this webinar and we will send you a link to the recording over email. We're shortly going to ask you to take part in a couple of quick polls to get a better understanding of how prepared you feel for the implementation of MTD. At the end of the webinar, there will be a short survey that pops up on screen, and we'd really appreciate it if you could take a couple of minutes of your time to give us some feedback. We've already had some questions sent in, but please do continue to submit your questions throughout this session using the question function, which is shown on the screen. And we will then cover these in the question and answer session at the end. So I'll just leave that there for a moment while you familiarise yourself with this function. So here's our panel for today's session. We have myself, Alex Knight, Matt Perkins from Hammock, and Debbie Pennell from Caxton's Property Consultants. In this session, we'll be covering what is MTD, what do I need to do about it. We'll have a short software solution demonstration by Matt Perkins from Hammock. And then Debbie Pennell is going to talk us through forthcoming changes to the EPC and also a summary of the Renters' Rights Bill. And at the end, we'll have a question and answer session. So before we get started, we'd just like to launch a quick poll so that we can get an understanding of your biggest barrier to MTD compliance. And this will appear on the screen in a moment, and we'll leave it there for a minute so that you can answer. Okay, so thank you for taking part in that. And it looks like we've got a real mixed bag. Not many people are worrying about migrating existing records, or none at all actually. But it seems mostly that people don't know where to start or what software to use. So hopefully we can address some of that in this short webinar. So let's start off with what is Making Tax Digital. HMRC wants landlords and sole traders to modernise their record keeping and use digital records. Each transaction must have a digital link that can be followed through from the initial entry in the records to the final tax return. Paper records will become a thing of the past, and while spreadsheets can still be used, it will be much easier to use a software package. Quarterly updates will be submitted roughly 5 weeks after the end of the quarter, and there will be penalties for late submission, so it is important to keep up to date. At the moment, payments aren't going to be linked to quarterly updates. However, if we have a chancellor who needs cash in future, they might spot an opportunity to accelerate tax receipts. However, they are keen to point out that this is not a stated aim of the MTD project, though. The quarterly updates, together with any annual adjustments, will be incorporated into a new digital tax return, along with other income such as interest, dividends, or employment income to calculate the final tax liability. So you can see that the balance of work is therefore shifting from the end of the year to regular in-year record keeping. why are HMRC introducing MTD? The main reason for HMRC rolling out MTD for income tax is because they believe that keeping digital records on a regular basis will increase accuracy. This is probably true, as there could be a gap of up to 21 months between a transaction being incurred and it being finally reported on a tax return. For example, income received on the 6th of April 2024 may not reach a tax return until the 31st of January 2026. So note that this will be as relevant for expenses as for income. Would you find that B&Q receipt 21 months later? By increasing the accuracy of record keeping, HMRC believe that this will increase tax revenue. They won't be checking the accuracy of the quarterly updates at this stage. They just want to know that records are being kept and being kept up to date. Our view, however, is that it's better to have accurate records as you go rather than having to complete and correct them at the end of the year. A similar system was introduced for VAT a few years ago, and they estimate it brought in an extra £185 million in revenue in the first year, so it has proved its worth. Although this is mandatory, it's important that you can see the benefits for you of moving online as well. The benefits include improved accuracy for your calculations and submissions. This might help you to estimate your tax liability and set savings aside earlier. It can give you timely financial insights, help you build a clearer picture of where you are throughout the year, and make better business decisions. Record keeping can be simplified. There's less paperwork, there can be automated recording of income and expenses, and ability to store documents. The end of year process is going to be more straightforward with real-time data. And your accountants and advisors can access your data more easily, offering more proactive advice and support. And we're going to see a demonstration later of some online software that can help give you some valuable insights. MTD applies to both landlords and sole traders. It will be extended to partnerships at a later date, but this is some way into the future. MTD for companies has recently been dropped, but HMRC is looking at alternative ways of improving company record keeping to reduce the tax gap. Those with combined income in excess of £50,000 in the 24-25 tax year will be in phase 1. So let me give you an example. Charles has rents of £35,000 from property and £23,000 from sales of his small business selling biscuits in 2024-25. He will be required to comply with MTD because he has total gross income of £58,000. So note that this applies to both trades and is before expenses. So it's based on gross income and not profit. Digital record keeping must start from 5th of April 2026 for those with relevant income over £50,000. The first quarterly updates will be submitted by early August 2026, and HMRC should be contacting taxpayers if they are required to comply. In 2027, the threshold will reduce to £30,000 and then to £20,000 in 2028. So it's more likely that people with one property in single ownership will need to comply in future. So another example, Camilla has rental income of £40,000 and has a partnership with William selling jam, which generates £12,000. She's not required to comply with MTD in 2026 because her relevant income is less than £50,000. However, she will have to comply in 2027 when the threshold reduces. So what do I do? First of all, don't panic. There is support available from multiple sources, including on the HMRC website. Talk to your usual customers advisor. Start planning as early as possible. You may have already received a letter from HMRC. The first thing to do is get your 2024-25 records and tax return up to date so that you know whether you will need to comply from 2026 or later. Turn it to your advantage too. You may find a system frees up your time record keeping and helps you manage your business better. Next, think about how much you want to get involved. You can do the record keeping and quarterly updates yourself, and we will shortly have a demo on a system that's designed to do just that. If this is something that you really don't want to do, then we can help you, or you might want to consider an independent bookkeeper. The next step is to find suitable software. There's a variety on the market, so talk to your usual advisor to find out what is best for you and make sure it is MTD compatible. And you can check the list on the HMRC website. Think about opening a bank account purely for your property income. It will make the record keeping easier and personal transactions are less likely to be seen by HMRC. The sooner you get started and get used to any changes you need to make, the easier it will be when you have to comply. So help us to help you. We've got a lot of clients who will need to do this all at the same time. So now I'm going to hand over to Matt Perkins from Hammock. Hammock have a system designed by landlords for landlords, and I should add not for accountants, and it is MTD compliant. And I should say at this stage that other systems are available and we can advise on what might be best for you depending on your circumstances. If you're a sole trader as well, or you need to do VAT returns, another software may be more suitable and we can help find one that works best for you. But I hope you like Hammock, and Matt is going to give you a brief demonstration of what Hammock can do for you. Over to you, Matt.
Thank you very much, Alex. Good morning, everyone, on this rather rainy, dreary morning. Let's hope it perks up a bit. I'm hoping to perk you up and excite you with Hammock. So look, the first thing I wanted to say is really to reiterate Alex's words. Don't panic. MTD is a huge change, especially for landlords who don't tend to use software. And if you rely on spreadsheets or you just chuck everything to your accountant. So it is a huge change. We've got a lot of landlords joining us at the minute in exactly the same boat as you. So one of the key things with Hammock is we have a really good support team that help you to get going and guide you and support you all the way through. What I would say is all of those landlords that are coming to us, again, because they're in the same boat as you, they really, this is something that's being brought and thrust on you, and you might feel uncomfortable about it. You might not be too keen to do it, but you can't do what you used to do. You can't just do everything at the end of the year. Now you're going to have to be organized. You're going to have to do those quarterly submissions. And actually the people that are using Hammock now, they are seeing those benefits that Alex talked about, which is being organized and having a much more clearer view of your account. And also doing that end of year is going to become actually a lot easier, where you're not spending weeks panicking when your accountant's chasing you. If you're self-employed or you've worked for a small business before, you might already have used some sort of accounting software, like a traditional ledger software like Sage or QuickBooks or Xero. The thing I wanted to kind of explain is that Hammock is not like those software. It is, but it's actually designed for landlords. Okay, they're not designed for the kind of the record keeping reporting you need to do as a landlord, whereas Hammock is. So just to give you an idea of the background of Hammock, just to kind of reiterate that, is that the three founders of Hammock are all landlords themselves, and they actually built Hammock quite a few years ago before MTD was even a thing. So the great thing with Hammock, and I'll show you in the demo, is that it's not just about your accounting and bookkeeping side. You're going to hear a bit about all the changes to the renters' rights. I do feel a bit sorry for you guys at the moment with all the changes that are coming down the line. But Hammock can also support you keeping important documents and keeping up to date on that side, as well as the accounting bit. So I'm now going to tell you a bit about the types of landlords that Hammock is ideal for. So we basically work for all types of landlords, and I'm going to run you through some examples of that might cover yourselves actually. So you might be an individual owner, so you might have all the properties in your own name, but quite a lot of you will have properties with a spouse or a partner, or even with a business partner, for example. And Hammock covers all of those because you just need one Hammock account for all of those scenarios. You don't need multiple accounts. You can manage those in Hammock. If you have a limited company, so a lot of landlords will have a limited company if you bought properties recently, for example, and while, as Alex mentioned, limited companies aren't brought into MTD, you might still have one. And the great thing with Hammock is you can manage those there as well as your own personal tax, your own personal properties. If you manage the properties yourself, that's great. You can manage those in Hammock. If you use a letting agent, the same thing. So with Hammock, and I'll show you in the demo in a minute, you can set up the letting agents with your tenancies, and Hammock splits out the letting agent fees. So it's ideal for doing that. As well as standard kind of tenancies, what we do see a lot of is HMOs, particularly if you've got student lets, and HMOs are very popular with landlords in sort of big cities as well. So we handle HMOs. You can set up properties with multiple rooms. Really, really good way of keeping track of, you know, what can be quite transient properties where you've got a lot of people coming in and out at different times. And if you own a furnished holiday let, although the tax system is changing with furnished holiday lets, you still need to treat them differently from a standard let, because obviously you're doing them very short term. And Hammock does allow you, we have a furnished holiday let functionality which you can use in there. So I'm going to talk to you now a little bit more about the MTD setup that we have. So Alex mentioned that you know, you're going to have to be doing these quarterly submissions. And in Hammock, we've actually already, and the great news, I suppose, for you guys is we've already got lots of landlords submitting their quarterly reports via Hammock. At the moment, there is the MTD beta testing, sounds really exciting, doesn't it? Which is a program run by HMRC to test the system with effectively guinea pig landlords. Now, I would have said a month or so ago, don't even think about going in for this at the moment, but actually now we've got people going. We've probably had near on 100 landlords that we've done submissions for, and it's a really good way of getting used to it and getting into it. So if you're comfortable and you talk to your accountant, it's probably worth thinking about actually getting started early. And as you can see from the screenshot, we've got a really good setup. You can see the income sources in there. Alex mentioned if you're a sole trader as well, you might use a separate bit of software for your sole trader business, which is really, I would strongly recommend you do that. You can't run your sole trader business in Hammock, but it's worth, you know, having software for both those scenarios. And as you can see, we tell you what obligations you got, the quarterly obligations. It shows you when you've actually submitted those. And it's very, very simple to set up. So there's three kind of key stages that you'll do. You'll set up your Hammock account first with your accountant and with Alex's team. You'll get all your properties in, and then you'll link your account to the HMRC platform. Now, if there's two of you, if you are jointly owned properties, it might just be that one of you needs to submit and the other one doesn't. That's quite okay in Hammock. You can do that. And then the final bit is actually doing the submissions. And I have to say, I was quite disappointed when I saw this because it's so simple and straightforward. I thought it was going to be very exciting, but it wasn't. All you have to do is in Hammock, you have all your transactions. Hammock will say, have you tracked them all? You'll say yes or no and track the ones you need to track. And then you do your quarterly submission. It's literally one button to do that. And Hammock with the link through to HMRC, provides you with a calculation of your tax based on not just your Hammock account, but any other income that you have in there. So that quarterly submissions you'll do in Hammock, and then your accountant will do your end of year as they still do now. And the good news is we'll remind you the whole way along of where you're up to, when your next submission is. And as you can see on the next slide, it's set out very, very clearly. So you'll see quarter one, quarter two, quarter three, quarter four. And then when all that information is together at the end of the year, all of that will get pushed through to your accountant. So your accountant will normally have a final accounts package, as we call them, and they'll pull the data through from Hammock and they'll go through. The really good thing for you guys is you do not need to be sending stuff through to your accountants anymore. So Creston Reeves, for example, they have a dashboard and they'll link your account to the dashboard so they can then go into your Hammock account. You can photograph all your receipts in our mobile app and then it pushes through to you. And with that in mind, I'm actually going to show you a little bit of a demo of the software now. So I'm going to take over control. I love saying that. I'm going to take over control of the presentation. Let me see if I can do this. Hopefully I can, because I've practiced this a few times. Here we go. Hopefully you can see my screen coming up now. There we go. Okay, excellent. Looks like we've got liftoff. All right, so this is what your Hammock account looks like. You have a dashboard, and really helpful for you. You can see things like the profit and loss. A lot of landlords will tend to chuck all their stuff to an accountant at the end of the year. Your accountant will tell you how much extra tax you've got to pay this year, and you'll mutter and moan. But a lot of landlords don't actually see on an ongoing basis what their properties are doing. So with Hammock, because it's this live reporting, you have profit and loss on your properties, and you can look at individual ones. With Hammock, you put in your property valuation when you set up your properties, and your purchase prices and your mortgage balances, and Hammock can keep track of all that. So when you're applying for mortgages, for example, you've got all your loan to value information there. In the overview screen, you can see the occupancy of your properties. You'll also see arrears. I'll come back to that in a second. Any of your tenants who owe you money, you will get a notification when they go into arrears. You can see upcoming payments, and you can see, very importantly at the moment in particular, rental yields. With MTD, it's made a lot of landlords look at their portfolios. It's really helpful to know your rental yields in Hammock, and you can see which properties are performing and which ones aren't. Okay, so just I won't go into tons of detail. What I will tell you is that with Hammock, I mentioned that we have a lot of support for you. So when you start thinking about Hammock, or even if you decide to take it up and have a go of it, we have regular webinars every single week, twice a week actually, where we go through the platform in a lot of detail, and you're welcome to come along to as many of those as you want. We also have this chat bot in the software. So if you want to ask questions or you need help with doing anything, that's live there. It's manned by AI and also humans like myself. So that's always on hand to help you. And we also have this excellent help center, which is basically answers all your questions, and it has lots of little videos just down from this help area here. Okay, so anytime you need a little bit of support and understanding how to do something, it's there. Just very quickly to explain how Hammock works, so that you understand how the simplicity of it is, we have 3 levels in Hammock. We have the ownership level. So this is where you have all your properties. In this example, we've got Mike and Mary. They have a personal portfolio for Mike, where the property in there is owned solely by himself. Mary has a property, and then in the joint ownership portfolio, you can see there's 50% ownership from both of them. And effectively in Hammock, you just set up a separate portfolio for every different type of ownership structure. And that would include if you had a limited company property, and you would have a limited company portfolio as well. Then you add your properties. So adding properties is really simple. We link through to Google. So you type in the property postcode, and you can see here, here's my one I made earlier, Blue Peter moment. Here's your 3 properties that you can see here. It tells you also lots of information about the property in the overview. So the income and expenses for the property, the rental income, and you can see which portfolio. So this is the one that's owned by the 2 of them. This one's Mike's and this one's Mary's. And if I click into a property, just to give you an idea of the amount of information and the helpful stuff that's in there. So this is a typical property page. You can see your mortgage and valuations in the tab at the top. And we also, and I mentioned this earlier, and I think you're going to hear a lot more about this in the next in the next presentation, is we pull through your energy performance certificate, and that's going to become more and more important in terms of the requirements for you to upgrade your properties and make sure that they're up to scratch, and the requirements for renting them out. The other thing you can do is save all your important documents. So here you can see we've got our gas safety certificate, and we've got reminders, so we tell you when those are due. We do that with your mortgages and insurances as well. So it's, if you're struggling with trying to remember all these things, it's really helpful to have them in Hammock, and we can remind you. You can add notes to pretty much everything in Hammock as well. So if there was any notes on the property, they would be there. So we have our ownership level, we have our properties level, and the last thing is we add our tenants into Hammock. So here's 3 tenants that we've added to those properties. And just to click into a tenant to give you an example of a tenant, what you can see, and this one is actually letting agent managed. So here's the letting agent information, £120 a month letting agent fee. You can see all the rent transactions. So as that tenant pays, it's recorded here, and you can see the running balance if they owe you or if they're up to date and everything else. And it's very easy to manage tenancies in Hammock, and you can record increase in rental payments and sort of deposits and all sorts of stuff. So really, really easy way to manage those tenants. All of this comes together. So once you've set it all up and you've got all your properties and you're happy with everything, this all feeds through to the tax statement. Now, this example here, by the way, is not the MTD kind of version. This is what it would look like at the moment, but it's very, very similar. It's the same principle. So here you can see what we create is taxable entities. We have Mary and Mike. If I click on Mike's, you will see what comes up. Here we go. So we have a tax statement that's created. What it tells us is that there's the portfolios and the properties that come under Mike. We can view those by individual properties, but what you can see is a summary of the income and expenses. We can see a tax estimation, which with MTD, incidentally, is much more accurate because it pulls through any kind of PAYE information and other detail. And then we have our subtotal boxes. So if I click in one of them, we can see what makes up that property repairs and maintenance, and you can see all of this information here. These are all Wix receipts. But just to kind of highlight the point of those, the reason for having those portfolios, here is the property that is joint owned. So you can see there's 1,200 income, and here's some expenses. They've been split 50-50. This is Mike's share of it, but the property that he owns on his own is a full 1,100. So very, very easy, very straightforward how that tax statement's created. Just a quick one before we finish the overview is just to give you an idea here. We have this whole area of called files and dates, and you have all the documents that you upload are all stored in here with expiry dates, and you can search them. All the notes you make are saved in here as well, so really easy to find. And then we also have an internal calendar, which a lot of our landlords find very, very helpful, which just gives you an overview of all the things that are going on in each month. Okay. If you're a reports buff and you love using reports, we also have this wonderful reports area where you can view things like your general ledger, and you'll see your profit and loss, sorry, not your profit and loss, you'll see your income and expenses by month for all those properties, and all of those are downloadable as well. We also have a custom report that you can use as well. And that is a very, very quick whistle-stop tour of Hammock. As I said, if you're very interested, obviously talk to your advisor at Creston Reeves, and we would be very, very happy to help you get on board and get going. So I'm going to hand you over. I'll stop sharing my screen. I'm going to hand you back over to Alex. Thank you very much for letting me show you the software, Alex, and I'll give the command back over to yourself.
Thank you very much for that demonstration, Matt. And I hope you found that useful. And we now just want to run another quick poll so that we can get an understanding of how you're feeling at the moment when it comes to MTD implementation. So thank you very much for voting on that poll. I think that's probably very much as we expected. A few people are very prepared. Some people are partially prepared, but most people don't really know where to start. So I hope that we've actually helped you raise some questions and know where to look for help. So finally, we wanted to look at a topical issue for landlords, and we've invited Debbie Pennell from Caxton's to talk about the EPC changes and the Renters' Rights Bill, which is in the final stages of becoming law. So over to you, Debbie.
Hi, thank you, Alex. I'm Debbie Pennell, Head of Residential Management Sales and Lettings at Caxton's, and I'll be running through the overview of the proposed changes to EPCs for residential rental properties and the Renters' Rights Bill. Over the years, housing law has changed quite a bit, but the Renters' Rights Bill is shaping up to be the biggest shake-up since the Housing Act of 1988, which first brought in assured and assured short-hold tenancies. It's no surprise then that many landlords are feeling under pressure with so many new proposals on the horizon. Right now, the Renters' Rights Bill is in the ping-pong stage at Parliament. This is when the House of Commons looks at the changes suggested by the House of Lords. That process kicks off on September the 8th, and if everything moves forward, the bill should receive royal assent by mid-September. Once this happens, it will officially become the Renters' Rights Act, likely coming into force in late 2025 or early 2026. On the energy efficient side, landlords had a brief reprieve back in 2023 when the plan to raise EPC requirements to a C rating was paused, but that proposal is now back in play. With around half of private rented homes in England currently rated a D or an E, many landlords could be looking at some hefty costs to bring their properties up to standard by 2030. Okay, let's start with the government's plan for the new EPC targets. Right now, the law says that all privately rented homes and commercial properties need at least an EPC rating of an E unless there's a valid exemption. But in line with the government's goals to cut fuel poverty and tackle climate change, the plan is to raise the bar to an EPC rating of C or higher by 2030. That would kick in for new tenancies from 2028, with all properties needing to comply by 2030. The details are still being worked out, but we're encouraging landlords to start thinking ahead now. It's worth planning improvements that are not only future-proof, which will not only future-proof your property, but also spread the cost over the next few years. This might include things like better installation, smart heating controls, LED lighting, upgrading to an efficient boiler, or even installing a heat pump. Exemptions will still exist, just like they do now, and you can check the latest guidance on the government website. One major proposed change is the cost cap. Landlords may need to spend between £10,000 and £15,000 before they can apply for an exemption if they can't get a property up to a C rating. That's a big jump from the current cap of £3,500, but it's still under consultation. On a positive note, there are grants available to help, and these can be found on the government website as well. One thing to watch closely is how EPCs will actually be measured going forward. The government is planning to change the way assessments work next year, but it's not yet clear whether this will make it easier or harder to hit the C rating. All in all, the key takeaway is keep an eye on EPC updates, plan your improvements wisely, and make use of any grants or schemes available. Staying ahead now will save you stress and money later on. Moving on to the Renters' Rights Bill. By now, you've probably heard about the main points from the Renters' Rights Bill, but here's a quick recap. The bill is set to shake up the rental market in a big way. One of the biggest changes is the end of the no-fault Section 21 evictions, which means renters don't have to worry about being asked to leave their homes with little warning or reason. Instead, tenants will have more stability and peace of mind, and they'll be able to push back against unfair treatment without the fear of being pushed out. Landlords aren't being left behind either. The new system will give them clearer rules to follow and stronger legal grounds when they need to regain possession of their property. As I mentioned earlier, this is the biggest shift in rental legislation since 1988. Our best advice to landlords is stay up to date, talk to your managing agent if you have one, and don't panic. These changes will be rolled out gradually, giving everyone time to adjust. We don't have time to cover every single measure of the bill, so I'll walk through some of the main ones. Firstly, the end of the Section 21 evictions. This means landlords can no longer evict tenants without a valid reason. Evictions will only be allowed in cases where the tenant is at fault or if the landlord generally needs the property back. From now onwards, landlords who want possession will have to use a Section 8 notice. As with the current system, if the tenant refuses to leave, the landlord needs to take the case to court. There are specific grounds where possession can be granted. For example, if the landlord or the family need to move back in or the property is being sold. For both these cases, landlords must give 4 months' notice. However, the tenant will benefit from a 12-month protected period at the start of the tenancy, during which they can't be evicted for these reasons. Other grounds for possessions include things like serious antisocial behaviour, a tenant being convicted of an offence, not having the right to rent, or falling into 3 or more months of rent arrears. It's worth noting that to give tenants more security, the notice period for temporary arrears has been extended, so renters will have more time to catch up and stay in their homes. Another big change is the creation of the Private Rented Sector Ombudsman. This is designed to help tenants solve problems with their landlords without having to go to court. Tenants will now be able to raise complaints against anything a landlord has done or failed to do that cause them harm, stress, or inconvenience. The key point here is that landlords will be bound by the Ombudsman's decision, and the consequences of ignoring them are very serious. Registration will be mandatory, and failing to register could mean a £7,000 civil penalty. Letting agents who advertise properties that aren't registered could also face the same fine. Landlords will also need to pay an annual fee to join the scheme. The introduction of the Ombudsman is a major shift. It means landlords themselves will be held accountable. The Renters' Rights Bill will also produce a new private rented sector database. All landlords will need to register their property or risk penalties if they don't. For landlords, it's basically a one-stop shop to check guidance, stay on top of rule changes, and show they're playing by the book. For renters, it's a win for transparency. They'll be able to see more info up front, know their rights, and take action if the landlord drops the ball, which is very important for the software, is that you'll have all the information that you need for your rented property in one place. AWAB's law will apply to private rented settings, clear legal expectations about the time frame with which landlords in the private rented sector must take action to make homes safe where they contain serious hazards such as damp and mould. The practice of rental bidding will end. Landlords and agents will be required to publish an asking rent for their property, and it will be illegal to accept offers made above that rate. The final point I've highlighted here is regard to pets. The Renters' Rights Bill means landlords can't say no to pets without good reason. Tenants may need pet insurance to cover any damage, but clear guidance will be shared before the rules start. A couple of other key points to note regarding tenancy reforms are that all tenancies will be periodic. A periodic tenancy means tenants can stay in their home until they decide to leave, as long as they give 2 months' notice. Whilst most tenants tend to prefer the security of a fixed-term tenancy, this change will help stop the unfair situation where tenants are stuck paying rent for substandard properties. It also gives both landlords and tenants more flexibility to adjust to changing circumstances. When it comes to rent increases, things will work a bit differently. Automatic rent increases in tenancy agreements will no longer happen. Landlords can raise rents once a year to match the market rent, which is the amount the property would fetch if it was newly advertised. This means landlords will need to make sure any increase covers their expected costs for the next 12 months. To notify tenants of a rent increase, landlords will need to serve a Section 13 notice every year, given at least 2 months' notice, which is up from the current 1 month. If the tenant thinks the proposed increase is too high, they can take it to a tribunal. However, the tribunal can only confirm the proposed rent or lower, not increase it, as it's been able to do up till now. The rent increase will also only take effect once the tribunal has made its decision, which could mean landlords risk being out of pocket in the meantime. Landlords and tenants can still agree to change the rent outside of this process, as long as the Section 13 notice has been served. One concern is that these new rules might lead to more tribunal cases, which could cause delays and backlog that the tribunal may struggle to handle properly. I realise I've shared a lot of information and there's a lot to take in, and I also haven't covered all the points. So please feel free to ask questions now or contact me another time, and I'll be more than happy to help. Thank you.
Thank you very much for those insights, Debbie. And now, as Debbie said, we've had a lot of information there, so now we want to give you a chance to ask some questions. So we're just going to put another reminder on screen of how you ask those questions and give you a chance to enter those. Now, we have already got a couple of questions, so perhaps if everybody can turn their camera back on and unmute themselves, we'll start with those questions. So one to you to start with, Matt. If a landlord receives rent from a letting agent who's managing a property, then they usually just get one payment a month, or maybe a quarter. Does the landlord need to put all of that month's expenses onto their MTD system? And if so, then basically need to put everything that's on the monthly statement, won't they?
Yes, they will. So sure. So that's a really good question, actually. So what you tend to find is those, as you say, the agents will normally send a kind of statement remittance. What you do in Hammock is you basically set up your tenancy saying that the normal amount, so on a normal month, the agent will take off like just their agent's fee. And when you track that in Hammock, you basically track it the first time, and Hammock will automatically track it every time it just sees the normal amount taken out. But what Hammock will do is flag any month or any kind of one where there's a different amount, where it's a lower amount. And what Hammock will do is say, what's the missing amount for? And then, as you say there, the landlord will just have to look at their statement, look at the remittance, and just put that additional amount in and track it as, you know, might be a bit of maintenance, it might be, you know, a search or something like that. So 9 times out of 10, the transaction will just automatically track for you, but you do have to, you know, any kind of unusual ones or any different amounts you will have to track.
Thank you, Matt. And we know that under MTD there is an element of doubling up, because you do have to have these detailed records. But if it means that you've got more accurate records at the end of the year, and as you're going to help you manage, then that can be helpful. But hopefully something like Hammock would smooth that process and make it simpler.
Definitely.
Okay, so I have another question for Debbie. So if with fixed term fixed term tenancies being phased out, how should landlords adjust their tenancy agreements and renewals process, please?
There will be no renewal process. The rent section 13 notice will take that over now. So a landlord can increase the rent once a year. The tenancy agreements that are currently in place are going to be fine, because they'll just go into what they call a periodic contract, which is a rolling contract. So there'll be no changes needed.
Okay, that sounds one thing that's at least not too complicated. Thank you. And a question on MTD. Can I still do my own tax return on the HMRC website? The answer to that one is going to be no. Once you are into MTD, the HMRC ability to complete your tax return on their website is not going to be available. You will either need commercial software of your own, and there are systems available out there, or you will need to get professional help to complete your tax return, I'm afraid. Another question for Matt. How much of the documentation, including mortgages, tenancies, etc., is obligatory in Hammock?
Sure. So in terms of the tenancy, you do need to put the tenancies in. You can record other income for rental income, particularly if you've got old tenancies that that have ended. You can just, rather than having to put them in and then backfill, you can just do that. But the whole way that Hammock works and the benefit you get from it is to have your tenant recorded in there, because like I said, especially if you have your bank account connected in particular, it's links through and automatically records those payments. So you do need the tenant in there. In terms of the other documentation like mortgages and any other, even the gas safety certificates and stuff, you don't have to save those. That's all up to you whether you want to do that. So the great thing with Hammock is very flexible. You can use it how you want, really. So in terms of documentation, you choose, but you would need to put tenancies in really to make it operate the right way.
Okay, thank you. So just to clarify then, that information doesn't go to HMRC, it's only the transactions, and really this is to make it more beneficial and useful to you.
It is, and just on that, Alex, just it's because a very important point. The even if you have an open banking feed into Hammock, as you do with lots of other bits of software, HMRC don't see the bank account. No one, don't see the transactions individually. As you know, you'll do your summaries and you'll do your final accounts piece. HMRC normally only see transactions if they investigate you. So a lot of people do ask whether HMRC have a direct link to view all of the bank transactions. That they don't. It's the summaries that you send through.
Okay, thank you. So on a similar subject, there's a question about MTD. So companies obviously are exempt, but if the owner of the company receives a salary or a dividend, does this need to be run through MTD? The answer to that is no. At the moment, only sole traders and landlords will be needing to submit their sole trade income, their rental property income in the MTD format to HMRC. Alongside this, if you have an employer, employment income will be already being updated to HMRC monthly, and there will be the ability to bring all this together to calculate tax liabilities. So no, extra information doesn't have to go through MTD, but it will come into the final tax return as well. Another question for Matt. For 25-26, I have been filling in rental income or expenses on spreadsheets. Is there a way of transferring this data, or will it have to be done manually?
Well, it depends how you keep the spreadsheets, but the short answer is it can be. So in Hammock, and I was going to mention this when I did the demo actually, the best way by far is to connect your bank account, but we do have the ability to upload CSV files with transactions. So you might need to do a little bit of fiddling around with those existing transactions and existing information, but you should be able to upload it. But on top of that, we will help you if you want to do it, and if you want to get started on Hammock. The support we give is second to none, genuinely. So we would be very happy to help you to transfer that information across when you get started.
And I think also, given that we're only a few months into the current tax year, actually it might not hurt to go back to the beginning to start. It gives you an opportunity to practice and play around, and you won't actually have to start submitting MTD reports until into the next tax year. So this is your opportunity to try it out.
Exactly.
Okay, thank you. Another question for Debbie. Is the Renters' Rights Act going to apply to existing tenancies, please?
Yes, it will affect all tenancies. So once it comes in, all tenancies, existing tenancies will go into a periodic. It won't all come in one go. They think that the databases will be one of the last things that they'll instigate. But things like the rent increases, all those kind of things, they will come in throughout the period of time, and it will affect all new and existing tenancies.
Okay. Sorry, another question for Matt. The commission from my agent is all taken a year in advance. How would that work?
Yeah, so that's fine. So with the agent piece in Hammock, if your agent does take payments on a regular basis, so if they tend to do it monthly or quarterly or anything like that, then it is better to set up the tenancy with an agent. If in the example you're giving, what you can do is you can just do a one-off a one-off kind of transaction from your agent. And you can do it that way around. So there's lots of different ways. We literally see every scenario. We see every scenario. So like some agents will take, they might not give you the first 2 months rent and things like that. So we have a way of dealing with every scenario. But that's how you would do it in that case. You wouldn't have the property as agent managed. You would just have that payment. You do that manually and put that in.
Okay, thank you. And I think from a tax perspective, many tax calculations are working on a cash basis these days as well. So actually, there could be an advantage in paying all your commission up front at the beginning of the tax year. So it might be something that you have to discuss with your agent. Right. Matt, if I'm letting a property in a European country, so in other words, receiving rent in euros and probably having costs in euros,
yeah,
can that work in Hammock?
So we do have lots of landlords with foreign properties, and we don't currently deal with euros. We are going to be, but we don't currently at the moment. But what they tend to do is they will, and because they tend to use a foreign bank, obviously, if the property is abroad, you can download your statement from that bank. You can then convert it in from euros to pounds, which sounds more difficult than it actually is. If you're a whiz like Alex on spreadsheets and stuff, you can very easily convert currency, and then you can upload the amount in British pounds, in GBP. So at the moment, I know that's not brilliantly ideal, but we have loads of landlords that do have those foreign properties. Incidentally, by the way, if you have to report in the country that you've got those properties, so some people, I know I'm not trying to complicate things here, but if you have that kind of foreign requirement as well in Hammock, a great thing is you can actually do a report based on an annual basis, even if you're operating in the UK on the standard April piece. You can actually provide that to an accountant over in the country of origin. So yeah, we can cover it. We don't do euros at the minute, but we will be, and you can do that conversion pretty straightforward.
Okay. Right, thank you very much. I think we've just about reached the end of our questions, but if there's anything that we haven't answered for you, then you can still ask more questions and we will answer them separately. Could we just move on to the next slide, please? So we just want to summarize quickly what we've talked about today. First of all, find out if MTD applies to you. Find suitable software that will work for you and is MTD compliant. Get started as early as possible. Check how any new laws are going to affect you, because there's a lot of change coming up. And finally, as we said, don't panic, help is available. So thank you very much. Our contact details are on screen now to see if you want to contact us, if you've got any questions that we haven't answered, or you want some help with sorting out your MTD, or you've got questions on the renters' rights. Thank you very much for joining us, and have a good day.